tax reform plan could have an impact on economic growth and American productivity. Joining us now, Anthony Chan, chief economist at Chase. Anthony, great to see you. I want to start with Home Depot. It's supposed to report results in a few minutes, possibly before the bell, certainly. They beat earnings expectations for 4 consecutive quarters. Can they do it again? And what does it tell us about what's going on with the economy?
Well, I think it tells us that the economy is quite vibrant. We're in expansion territory, but it also tells us that they're going to be big beneficiaries of Hurricane Irma, Hurricane Harvey, and of course, even Hurricane Maria. We know that they have a significant footprint in all the areas that those hurricanes hit. I mean, just to give you an example, in Houston, they have a significant number of stores, 27 stores to be exact, in Houston. So that gives them a direct exposure to the rebuilding efforts and the cleanup efforts that normally take place after hurricanes. And so I expect their earnings to be up at least 13.5, maybe even a little bit more from last year. And that explains why Home Depot is actually outperforming the S&P 500 in the last year.
Wow. So the stock is up 24%, as you say, doing very well indeed. And just for viewers, if you own Home Depot, they're expected to report earnings of $1.82 a share. That's the benchmark there. And according to Anthony here, they could be over that. I want to move to the broader economy, though, for a second. As we've been saying all morning here, Steve Mnuchin, the Treasury Secretary, is saying that Trump is not moving off of that 20% number. He wants corporate taxes to move down to 20% from 35% right now. What kind of impact could that have on the economy?
Well, Jerry, there's no question that the more you lower taxes, the more you make it attractive for businesses, the more of a positive stimulus on investment. And a higher investment, of course, means higher productivity and faster economic growth. I've done some research that finds that everybody complains about low productivity growth, but the best cure for low productivity growth is faster economic growth. In fact, when you look at the data and you separate it into those periods where real GDP is below trend, and if you look at growth in GDP all the way back even to 1949, trend is about 3.3%. It's a little bit less than that if you bring it down to 59, but guess what happens? Productivity growth grows a lot faster when economic growth is above trend. So if you push real GDP growth higher, you're going to push productivity growth higher. That's good for wages. That's good for corporate profits. It's good for America.
So hand in hand, productivity and GDP growth. That's good to hear. I want to talk a little bit about the market, though. You know, we've seen this incredible juggernaut of a market. We've only been stalled a little bit in the last week or so, losing a little ground here. What do you see for the balance of the year? Do you think people are going to move for safety now and sell some stocks as we come into the holidays?
Well, I think that historically, this is seasonally is a good time for equities. So I expect equities to continue to go higher. The higher the likelihood that you're going to get this tax reform, the more equities will go up. And the reason for that, if you look at next year's S&P 500 earnings for the market, it's about $1.2 trillion. If you cut taxes and you have that deficit over the next 10 years of $1.5 trillion, that's a boost of at least $60 billion to corporate profits in the S&P 500 of about 5%. So that should support stocks.
Wow. I was just looking at those numbers. The NASDAQ up 30% since the election. Phenomenal performance. Anthony, thanks for coming on the show. Great to see you.
Pleasure.